Welcome to the Capital News. I'm your host, Alex Karitis. Today is Wednesday, May 27th, 2020. Thank you so much for joining me. Title of today's podcast is Trouble in Chinatown. We're going to focus a little bit more today on an article out of USA Today on some breaking news regarding the USA's decision in relation to the autonomy of Hong Kong. We've talked about this last week with the legislation that is pressing within Beijing to start encroaching further upon the autonomy within Hong Kong. We said we would get back to it. I wanted to focus primarily last week on a lot of the economic data that was coming out. We will be continuing to do so tomorrow because we will get initial jobless claims for the prior week. We will get the Federal Reserve's updated balance sheet. So we will get back to that. We were talking about the history and the corollaries and the similarities between the Great Depression, 1930s, to what is taking place today, both in rhetoric and in action. We will get back to that, continuing to make my way through that book, which we have been discussing for the past few days. A lot still to be discussed, although today a lot more, from what I was reading, a lot more just color and context, setting up for the New Deal, the Roosevelt FDR administration, moving some of the players around, putting his people into positions of power and authority. Again, it's laughable, but it's tragic at the same time. It's one big club, and we ain't in it. I mean, you think I'm joking when I say who's marrying who, whose uncle was a secretary of this, secretary of that, a chairman of the board here, CEO there, a founder of one of those many facilities with the acronyms for the government. I mean, it's unbelievable. Making my way today through the Lehman Brothers. Yes, the Lehman Brothers. Okay, talk about one big club. We ain't in it. It's consolidation, it's consolidation, it's consolidation of power, control, industry, wealth, you name it. Do not let a crisis go to waste. We talked about World War I. Yesterday, we talked about, obviously, the Great Depression. Continuing to talk about the Great Depression. Look at the events of 9/11. Look at what's taking place today with the coronavirus. They seize these opportunities. They don't let them go to waste. They pass sweeping legislation. They put their people in power. They gain better control over industry, market share, influence in all levels of our government. We were warned about this military-industrial complex from a prior president. Not somebody screaming from a rooftop with a tinfoil hat on. The President of the United States, Dwight Eisenhower, warned us of the military-industrial complex. This stuff is real, ladies and gentlemen, and it is in our faces. You know, what was also highlighted in the readings that I came across today is, once again, showing my point. You have the Roosevelt family. Obviously, you had Teddy Roosevelt, the Republican, and you had FDR, the Democrat. And it just talked about their connections, who they particularly favored with. One was more with the House of Morgan, one was more with the House of Rockefeller. Back and forth, back and forth. There is no difference. Sure, they can put on a show. Morgan would rather have a little bit more control here. Rockefeller would a little bit have more control over there, etc., etc. But guess what? They all got together at the end of the day, didn't they? To create the Federal Reserve System, which we are still paying for to this day. And what they are doing now is highly criminal, fraudulent, beyond their scope. But they're doing it, and nobody's stopping them. Nobody's stopping them. Not the president. He's happy with it. He signed off on it. He loves having the excess. Loves the money printing, loves the low interest rates, can't wait for negative interest rates. Hold on, Mr. President, they'll be here. Don't worry. You'll get your wish. Democrats couldn't care less. They love it too. There's no check. There's no balance. It's all lopsided. No oversight, no transparency. but that's okay. Market performance. Another strong rally on Wall Street today. Right now in overnight trading, we have the Dow Jones up 0.5%, the S&P gaining about 0.2%, the Nasdaq 100 down 1/3%. In futures trading at the time of this podcast. Cash trade in Japan is up 1.5%. Across the pond in Europe, all in the green on the major indexes, anywhere from about 1% to 2.5%. Over there in Spain, cash trade in Australia up 1.4% right now. South Korea, central bank cuts their interest rates to a record low of 0.5%. and expects the economy to shrink further. No surprise, ladies and gentlemen, you should not be surprised at all. This is a continuation of a race to the bottom. On the commodity front, WTI trading at $31.58 per barrel, Brent $33.87 per barrel, natural gas at $1.85 per million British thermal units, gold and silver both up today. Gold trading at $1,716 an ounce. Silver at $17.28 an ounce. Yesterday, there was a little bit of, obviously, a pullback in gold, which made somewhat sense if you're going to think, okay, it was that risk-on event. Let's get into riskier assets. Let's get into the stock market. Let's sell some of our gold positions, which obviously gold has been doing well. Okay. You would think there might be a continuation of that today, but that did not happen. Gold was able to climb for the day, as was silver. So this will be interesting to see how this continues to play out. Are gold and silver both forming another base for another leg higher? Is this consolidation? Time will tell. Precious metals, bull market, as far as I'm concerned, do your homework. You cannot have a race to the bottom. You cannot have spending by governments, spending money that they don't have. Federal Reserve, ECB, any central bank, you name it, printing money. And then to think that somehow gold and silver aren't going to outperform. It doesn't mean it's going to happen tomorrow. This is a process, but you have to be prepared. Because these governments, these central banks, they evidently don't give a damn about their own currencies. And the dollar has gotten shellacked, taken a bath the past couple of days, which is very interesting because we've done multiple podcasts here and discussing the dollar specifically. So something's going on here behind the scenes when it comes to all of these currencies, how they're trading, the volatility that's taking place in the Forex market. It's really something to watch. Uncle Sam's U.S. 10-year Treasury note yielding 0.69%. So that's some of the market noise. Again, what I want to focus on here is just that USA Today story, because the protests, ladies and gentlemen, the global protests are not transitory. They are history in the making, as far as I'm concerned. No ifs, ands, or buts about it. Everything was bad prior to COVID-19. It is worse now. They will be coming out. And then, of course, there are protests in the United States because of the lockdowns and because of the death of George Floyd, who I'm sure many of you are aware of, who was basically killed at the hands of the police in Minnesota. Not good. Not good at all. So don't be surprised if more protests start to pick up there as well. This stuff has to stop. I don't know what these cops are doing, but this stuff is been out of hand, and it just continues to get out of hand. But to the main point of today's podcast, again, out of USA Today, Pompeo, that being Mike Pompeo, the Secretary of State, declares Hong Kong no longer autonomous from China in a move that threatens to escalate U.S.-China tensions. Secretary of State Mike Pompeo declared Wednesday that Hong Kong is no longer autonomous from China, a landmark decision that is likely to escalate already strained U.S.-Chinese relations and that could have serious economic consequences for the global financial hub. Quote, no reasonable person can assert today that Hong Kong maintains a high degree of autonomy from China, given facts on the ground, said Pompeo. The White House will determine the next step, which could involve new sanctions on China, visa restrictions on government officials, or nixing Hong Kong's special trade status. Quote, "We'll do our best to ensure the people of Hong Kong are not adversely affected," end quote, said David R. Stilwell, the Trump administration's Assistant Secretary of State for the Bureau of East Asian and Pacific Affairs. Quote, "There's a very long list of things that the president can do in response," Stilwell said. He declined to offer more specifics, but said the White House's actions would be as targeted as possible to avoid hurting Hong Kong while sending a clear message to China's authoritarian leaders. Pompeo's assessment was sparked by the Chinese government's move to assert sweeping authority over Hong Kong and comes as tensions between the Trump administration and Beijing have dramatically escalated over the coronavirus outbreak. Hu Zhijin, the editor of a Chinese state-controlled media outlet, shot back at Pompeo over the Trump administration's assessment, quote, "Whether China's Hong Kong is autonomous, how could it possibly be up to the U.S. to define?" He said on Twitter. He called Pompeo a habitually lying Secretary of State. Hong Kong was returned to China from British control as a semi-autonomous territory in 1997 on the condition that China maintained a, quote, "one country, two systems," end quote, framework guaranteeing freedoms not found on the mainland. Chinese leader Xi Jinping is poised to push a national security law through his rubber stamp legislature that would ban treason and other perceived offenses in Hong Kong, a move critics say is designed to stifle pro-democracy protests and put the territory firmly under China's rule. Quote, "Hong Kong and its dynamic, enterprising, and free people have flourished for decades as a bastion of liberty, and this decision gives me no pleasure," end quote, Pompeo said. Quote, "While the United States once hoped that free and prosperous Hong Kong would provide a model for authoritarian China, it is now clear that China is modeling Hong Kong after itself," end quote. Pompeo was required to make the determination under a U.S. law that grants Hong Kong special trading status, including exemptions from certain tariffs and export controls that the United States imposes on China. In a show of support for Hong Kong's autonomy and the democracy protesters, Congress passed bipartisan legislation last year requiring the State Department to annually reconsider the territory's special treatment, which has helped elevate the city to a global financial power. Chinese officials were furious when President Donald Trump signed the bill into law last year. It's not clear whether the administration will move to strip Hong Kong of those economic perks. And then lastly, there's a little bit of back and forth here between some of the protesters and what they think is actually taking place. But then I just want to highlight this one part. The Council on Foreign Relations, a Washington-based think tank, warned in an analysis May the 21st that, quote, "the risk of a military confrontation in the South China Sea involving the United States and China could rise significantly in the next 18 months, particularly if their relationship continues to deteriorate as a result of ongoing trade frictions and recriminations over the novel coronavirus pandemic." So that's the article. This is big, ladies and gentlemen. It is breaking news. Again, I don't know how Hong Kong continues to survive economically. They are so overlevered. The real estate market is one of the most overvalued markets from a historical standpoint in the world, and that is also the case with many places in Australia, in Canada, certain states and cities within the United States, and also a similar case in Europe, but not to a lesser extent. A little bit of perspective. Again, I think I've mentioned this before. I don't simply talk about Hong Kong because I have a huge fascination with Hong Kong. I don't have any friends or family in Hong Kong. But this is an important financial hub. It is a gateway. The ripple effects of this could be devastating and very, very long-lasting. If this escalates further, if this really turns into something much more serious. It doesn't necessarily have to be a hot, kinetic war. bullets flying through the airs, missiles being dropped. Could be economic warfare, which we are most definitely in the midst of, especially between the United States and China, but a whole host of other countries are also in the mix. Don't forget about what the Saudis and the Russians did with the oil markets, the effect that has had on the shale play here in the United States, amidst a whole other tranche of issues that we talk about here regularly. Great financial crisis. A lot of that was kick-started in Iceland. A lot of people don't realize this, but Iceland had a big role in that, okay? Not discussed, small country. Here you have Hong Kong. So don't be surprised if you have major ripple effects that come out of small countries, small areas, corporations, whatever the case may be. The world is extremely fragile. The bubble is huge. The skin, the outer skin of that bubble is very thin. It is very fragile. It's not going to take that much to prick it. It's already been pricked. COVID-19 has done that in spades. And for these markets to rally like they have been is unbelievable. I understand a bear market rally. That's history. That's what we would tell us. That's what it would suggest. But the continuation on BS headlines amazes me. It truly does fascinate me that the markets continue to jump all over any justification whatsoever. And I do not think that the markets are pricing in these geopolitical risks. I think they think, okay, well, we're going to get a vaccine. Everything's going to go right back to where it was before. Where it was before was not solid. It was not structurally sound. Does anybody know what's the end game here with Hong Kong and China and the United States? Throw Taiwan into the mix. And a whole host of other issues in the South China Sea. That's China's backyard. Maybe they don't want us meddling there anymore. Would we like it if China was sailing around Cuba or Puerto Rico? Probably not. So this is the back and forth. This is the pot calling the kettle black. This is why you cannot meddle in other people's affairs. This is what comes of it. And this is just getting started. But again, it amazes me that Hong Kong has still survived. But I don't think it's going to for much longer. I take no pleasure in saying that. It will affect a lot of people globally. Make no mistake about it. But they've been over-levered. They have a currency peg that we've discussed here in greater detail in previous podcasts when we were talking about the dollar, the currencies, the race to the bottom, all of these interconnected issues, what that could mean for the global economy. Because remember, folks, great financial crisis, so much of the world was suffering from that, socially, economically, but you still had China who was able to keep afloat many, many countries and industries because they continued to borrow, to spend, to build, to invest. Well, that's coming to a halt because of COVID-19 and because they were simply reaching their limits. There's only so much you can do. Well, Hong Kong was a benefactor of that. They're a beneficiary of that, I should say. So Hong Kong didn't really suffer from the great financial crisis. And because they are that financial hub, that financial gateway for China and many parts of Asia, they were doing great during the bubble of the great financial crisis, the housing bubble. They were reeling all that in too. Hong Kong has never really had any type of correction over these past many years. Same story with Australia, being able to avoid a recession for the past 20, 30 years. I think it's closer to 30. All parties come to an end. These protests that will pick up again in Hong Kong are going to lead to something I think is going to be devastating. And it's not just these protests. It's the protests in Iran. It was the protests in Iraq, in Algeria, in Egypt, in Bolivia, in Peru, in France, and coming to a theater near you. Lebanon, burning banks down. It's going to get nasty. Because the curtain has been pulled away. People in other countries have known about the puppet masters, have known about the man and the men behind the curtain for a long time. Here in the United States, it takes a little longer for people to wake up because we have things so good relative to so many other places on this planet. You got a microwave oven. You got a 7-Eleven down the street. There's a lot of convenience. You don't like the way the world looks? Pop a pill. A lot of people don't have that luxury, I guess you could say, or that convenience. And so when they're struggling to put food on the table for themselves and for their children, and they know the games that are played with their dictatorships, their tyrannical regimes, wherever the case may be, who funds them? Who gives them money? Who props them up? Hint, hint, the United States has. Other countries do as well. They know who the enemy is, and they're sick and tired of it. They have nothing else to lose, so they are losing it. And they are protesting. So do not be surprised if we see more civil wars, if we see government overthrows or attempts at them, and of course, inter-country conflicts. I take no pleasure in saying any of this. This is just simply what I have been witnessing and what I think is going to happen. Because what are all these protests for then? Just to vent? Just to let the steam out? I don't think so. I think this time is going to be a little bit different. And I know to caution using those words, but something just doesn't seem right to me. And we've pinpointed this months ago, that these protests are not transitory. They are history in the making. And as negative a period or as dark a period as this could be, I am still optimistic on the other side of this, that people can reclaim their countries, their identity, their politics, and their destiny. But power and the powers that be are not going to just say, oh, okay, well, you got us. Here are the keys to the kingdom. Go ahead and have your way now. We're done. That's not going to happen. That's not how it works. So this transition, almost by definition, has to be nasty. Because that's how people operate. And that's, again, just another history lesson. It would be great just to pass the baton peacefully, but that doesn't happen in too many parts of the world, as so many are well aware. So there is trouble in Chinatown. Phase 1 trade deal, bunch of BS. We were all over that last year. It amounted to nothing. A signing ceremony, a bunch of crap, a photo op. That was it. A marketing ploy by a master marketer, Donald J. Trump. That was it. All sizzle, no steak. Get nothing. Now with coronavirus, the blame game that we have discussed here multiple times, it's only going to get worse. It's only going to ramp up. God forbid there's another major second wave. What do you think's going on? Especially if it happens before the election. Because this is going to be front and center, the blame game, pushing on China, China responding in kind. Strong men are in position around the world. And I use that term lightly, strong men. But they are. MBS in Saudi Arabia, Putin in Russia, Xi Jinping in China, Trump here, Bolsonaro in Brazil. List goes on and on. You know the names. We talk about them. They're all there. They all got a safe face. Everybody's got to look tough. Maduro in Venezuela, the Ayatollah in Iran, Rocket Man in North Korea. Everybody's got to look tough. And they all have a lot to lose. And they all think they have a lot to gain, too, by being strong men, throwing their weight around, being authoritarian. So just watch. Somebody's going to make a move. All it takes is one slip up. One slip up. And we're at war. And God forbid that happens. But when you have this much tinder and kindling all over the world, it doesn't take much to ignite a spark that gets out of control. So pay attention. Not only is there trouble in Chinatown, there's trouble brewing everywhere. So stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.